in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agri Marketing out of Morton, Illinois. And this edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom delivering insights, and Dryshod boots, the official work boot of the Moving Iron Podcast. Chip, how you doing this morning?
Pretty good. How you doing, Casey?
Not too bad, man. Well, there's a little bit of a swing in the market yesterday. Obviously, end of the month, so I'm sure there's some profit taking there, but maybe some of this this marginal rain that they had down in South America might have spooked people a little bit.
Yeah, we started to see a little bit of a shift towards slightly wetter in the forecast, and they are going to get some rains in some areas. Now, a lot of those rains are still going to be ending up like half of what they need, and there's still some very, very dry areas, particularly in some of their main growing areas of both Brazil and Argentina. But it was the end of the month. We've had a heck of a run. We couldn't... they say a bull market needs fed every day, and with rain in the forecast, that's certainly not feeding the bull, even if it pans out to be not enough rain. And so beans kind of tried this $12 area for, I don't know, the fourth or fifth time, couldn't get through it. And at the end of the month, you saw a little bit of profit taking. I think it was exaggerated. I don't think the forecast on face value was, that wildly bearish. But it kind of combined with the last day of the month, and we saw a little bit of monkey business from the funds. It always kind of seems to coincide with, last 2 or 3 days of a month, and sometimes the first 2 or 3 days of a new month. So that's when we have to kind of watch this first 2 or 3 trading sessions of December here for what the funds want to do. Now, we have slightly bounced in the overnight, so we have stabilized a little bit, but we'll have to see once we kind of open up the day session here, if that selling pressure continues or not. So it's going to get interesting. We've talked on, past podcasts here about the great potential for greatly increased volatility, especially in the beans. And you are starting to see that a little bit. So we're, having 30, 40 cent swings, in a day that 9 months ago would have, blown our heads off. But right now it just looks like, normal daily ranges. So that volatility from these price levels likely going to continue to increase here. So we got to kind of get used to that, I think.
Yep. Okay, so a consultant down in Brazil, I think pretty widely followed, Michael Cordier, he has made several predictions here as he looks at stuff. And in Brazil right now, he looks like he's dropping the soybean crop by 2 million metric tons, 130 million metric tons, and looks like full season corn by 2 million metric tons as well to 104 million metric tons. So for all of you at home that are playing the math game here, he's done that. They're down about almost 10 million metric tons, it looks like, across over the course of doing this. And I'm looking at the Pro Farmer report that I get every morning here, and there is some rough estimates that he put out there as far as moisture stress goes. Brazilian soybeans are about 40 to 50% stressed, or the crop is stressed. Full season corn in Brazil is 50 to 60%. Argentine soybeans 30 to 40%. Argentine corn 40 to 50%. Paraguay soybeans 50 to 60%, and Uruguay soybeans 50 to 60%. So he's not very favorable on what was out there, and he mentioned that the rain that they're getting is very marginal at best, and basically it's not going to do much for the crop that's there. So there is the idea of this weather market that we're in is getting a little more entrenched, it looks like, as some of these reports coming out of Brazil right now.
Yeah, and as you get into here the month of December and certainly towards the end of December and into January, things start getting a lot more critical down there as far as, productive stages of their crops go. It's hard to generalize because their growing season is so spread out, from northern Brazil to the southern areas of Argentina, you're talking about, I don't know, probably close to 2,000 miles north to south. So you have a wide variance of growing seasons there. Some of those areas, they plant 2 crops. So it's hard to generalize, but as you get deeper into December and January, that productive, crop development becomes much more critical. So if this dry weather were to continue deeper into December, I think crop estimates would continue to shrink. The USDA usually is kind of a lagging indicator on our crop reports as far as crop production goes. Mm-hmm. The boots on the ground and some of the private companies down in Brazil have a closer, their finger on the pulse a little more. So that's what the market's going to watch, are these private estimates and what direction they're going and how deep the cuts are getting. There's potentially a big enough crop in Brazil on the bean side that if you shave 3, 4, 5 million metric tons off of it because they increase their acreage, it would not be the end of the world. Right. It would certainly tighten things up a little bit. But if you extend this hot, dry weather, for the next 8 weeks, say, and they're fighting this clear into January, you could potentially shave a lot more off, 10, 15 million metric tons, maybe 20 million metric tons in total in the southern hemisphere. That starts moving the needle a lot. And so, again, I think that's what's going to start driving this volatility that you're starting to see increase in beans is the weather. And, hardly any drought features zero rain. So we knew at some point in some locations it's going to rain, and you're starting to see that. It's just a matter of, is it helping? Are they going to get follow-up rains? Is the pattern shifting? Or is this just one rain and it's going to swing right back to, the hot, dry pattern driven by La Nina? And most meteorologists kind of expect that from what I'm reading and watching, is La Nina hasn't shifted, hasn't changed. So they continue most likely to fight this dry pattern through the bulk of their growing season now. And it's just a matter of, how much that's going to ding the total production in the southern hemisphere. And that's what's going to really drive prices. We might not know that for a while. We might not know it till, they start harvesting, February, March, April time frame when they finally get finished up down there. So this is going to be a work in progress and is going to push to drive a lot of this volatility that we're seeing.
Yeah. So the other thing that we've been paying attention to here the last couple of weeks for sure is the wheat crop and what it looks like around the world again, where it's key growing areas are still pretty dry. Yesterday, Russia had a report out that they're going to somehow boost exports, and today there's a report out that 22% of Russia's grain sowing is in poor condition. So I don't know how they're going to boost exports with 22% of their crop in poor condition, but I am not an agronomist. But what are your thoughts on the wheat market as we look right now and as what we see happening around the world? I was down in Kansas over Thanksgiving, and there was they had a pretty good storm come through. They had some pretty good rains come through. Obviously, wheat's in the very early phase of where it's at. Good green, lush looking wheat out there now, but I guess it's still early, so you can't make a lot of decisions on that as we go through the winter. But what are your thoughts on what's happening in Russia? And honestly, it looks like there's a bigger problem there developing than we've seen in the past.
Yeah, and that's, again, we've seen that in years past. It's like you don't know what Russia's going to do until about 10 minutes after they do it. It's been back and forth from, we're going to put an export tax on to no, we've got plenty of wheat. We're going to export more of it. Nobody knows what to think. There's a lot of politics involved. It appears that the livestock sector of Russia is kind of balking at higher domestic wheat prices. They feed a lot of wheat over there, and kind of, campaigning the government to, keep some of that wheat domestically to keep prices down. Probably the export people are on the other side of that, saying, "No, we got plenty of wheat. It's sitting right here at the port. Let's push this out. We got plenty of buyers for it." So, little bit of talking out of both sides of their mouth, and That's typical for Russia. I don't know which way that's going to go. Likely it's going to make about 3 more round trips to, kind of get the market roiled up. Did see the other day also an increase in the Australian wheat crop estimate. They've really, for multiple, probably 2.5 years, fought or have been fighting dry weather and kind of a multi-year drought in Australia. And so their crop estimate was raised a little bit. That took the market a little bit by surprise, in addition to this wheat news. And so the wheat market, not to be outdone by beans, has been pretty volatile in its own right, kind of flying all over the place. Now, certainly yesterday really did not bode well. Wheat market. And, we'll see if there's follow-through selling. If there is, you could potentially technically push this wheat market down, maybe another 25 to 30 cents, maybe down towards the 560 level versus March wheat. But it's going to be subject, almost like a weather market, to different world weather events, particularly here, what's happening in Russia and their politics surrounding whether they want to keep some of that wheat internally or export it, and how much they're going to export. And that seems to change on a couple times a week. So I think the wheat market is going to continue to be volatile. And it's hard to trade that because weather changes and, Russian politics change. And so, certainly this market's going to be thrown around a little bit. But now I think it's pretty clearly cut technically. Throw out all the fundamental information. Right now, I think the path of least resistance is for lower, and it would take a close back above the highs from 3 days ago, which was 622 3/4 in the March wheat, to renew the uptrend that we have been in for a while. So I think that's kind of the way you play it. Those are big ranges, though, but you're starting to see an increase in the daily ranges. And, again, we've talked about that. This volatility is going to increase before it decreases, and maybe rapidly increase with much bigger daily and weekly trading ranges. So, right now I'm kind of playing the wheat market that unless you can get above the highs from 3 days ago, that 622 3/4, the path of least resistance is lower. I think you're going to find willing buyers lower because of some of the crop problems we've had in the world, but that's all subject to change with, a tweet or some news out of Russia, or, weather is still going to be a big influence for this northern hemisphere wheat crop over the coming months.
Yeah, a lot of stuff to pay attention there, man. There's a lot of moving parts in that sector of the economy for sure. So, well, fun fact of the day: the global debt is tracking to hit $277 trillion by the end of the year. That's what the T folks. And that's a record 365% of the world's GDP. So I feel like if I had 365% debt compared to my assets, I would be bankrupt. I don't know for sure how that works, but maybe I'm not the economist that I think I am. But I feel like that's the whole world is just living on a credit card right now. So,
well, I did get my bachelor's in economics, Casey. So
did you? Okay.
Yeah, I carried a strong C average, but that still, I don't think that's a good sign.
No, I think I'm going to agree with you there. So that's an overwhelming number if you think about that.
And increasing.
And it's not slowing down. So
minute by minute basis. Yeah, it's just you wonder where that's gonna end up. We already see negative interest rates in a lot of areas of the world, and the dollar made multi-year lows. So that is part of the reason we just continue to pump money and zero interest rate policy and
that's kind of makes you wonder if every major nation on the planet is that far in the hole, that what's it matter, right? If everybody's broke, let it ride, right?
Yeah. I know it. It's a race to the bottom.
It is that for sure. So, all All right, Chip. Well, good stuff as usual, man. If folks want to reach out to you and get some more information about what Blue Reef can do for them or working on that plan, what's the best way to do it?
Yeah, best way is just give us a call, 309-550-7213. Would love to chat with you. No pressure. We're not very high pressure people, but certainly having a risk management plan and executing on that plan is more critical than it ever has been.
Right on. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest episodes of the Moving Iron Podcast and any blogs that I post as well. Moving Iron Podcast is also found on movingironllc.com. That's where you can find all the information for the upcoming Moving Iron Summit, Nashville, Tennessee. That is January 20th through the 22nd. There'll be some great speakers there and a lot of good stuff going on there. So make sure you check that out. If you have any questions about that, make sure you shoot me an email at movingironpodcast@movingironpodcast.com. The Global Ag Network is a great place to find other like-minded ag-related podcasts. Everything from the Moving Iron Podcast all the way to what Brent and Landon do over there on the Dryland Farmer Podcast and the shenanigans that they pull on a weekly basis. So with that, I am Casey Seymour, Chip Nellinger. Let's go move some iron, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.